How's it going, everyone? Hope you're all having a great day. And today I want to start a new series called 10-Minute Thursdays, where I basically take a financial asset and analyze it to the best of my abilities in 10 minutes. So let's get straight into it. So for today's video, I want to analyze the stock called SoFi. So SoFi is a fintech company helping people get their money right. It was founded in 2011 and it currently has around 1,500 employees. You can download the app for absolutely free on the App Store and then use the app to invest your money, save for retirement, make plans to pay off your debt, and also take loans. Basically, it acts as a central hub to take care of all your personal finance. Now let's take a look at their Q3 earnings for 2021. So year over year, which is Q3 2020 to Q3 2021, there's been a 96% growth in the number of members on the platform. And just from Q2 2021 to Q3 2021, there's been a 35% increase in the number of members. And now if you look at the number of products, there's been 179% year-on-year growth on financial services products, which is a lot. If you look at the growth in products by segment, you can see that the lending products of SoFi haven't grown as rapidly as either the financial services products or the tech platform product. This is because the pandemic hit SoFi's lending business pretty hard. Biden decided to freeze up student loan payments, and also the non-existent interest rates have hurt the lending business. With that being said, the Fed has decided to start increasing interest rates slowly this year and also unfreeze the student loans come May. But that might change at any time, but tentatively that's what they've planned. Rising interest rates might help SoFi because people might move their money to banks, and then SoFi can invest this money and keep the difference between what they make and the interest rates as profit. Now, some of you might say that the rising interest rates might hurt SoFi's lending business, but I think with inflation at an all-time high and people so used to a lavish lifestyle right now, they're actually going to have to take out more loans in order to keep up with that lifestyle, which would help SoFi's lending business. Now let's move over to their financial report. As you can see, as of 30th September 2021, SoFi has around $533 million in cash. Now this is a good number because they can invest this cash into R&D and also use it for marketing campaigns in order to grow their user number. Now, if you look at the net loss in the past 9 months, you can see that the net loss in 2021 is almost like 2.5 times what it was in 2020. Now, this is a bit concerning, but if you look at the total revenue, you can also see that the total revenue has almost doubled from 2020 to 2021. But revenue really doesn't mean much if you're still under loss. And as you can see, as of Q3 2021, SoFi is still around 30 million in loss. But let me tell you why or how they could reduce these losses so easily. If you look at the sales and marketing numbers, the amount they spend on it, they spend 114 or 115 million dollars on sales and marketing, and also 75 million dollars on technology. If they were to reduce either of these expenses by even half the amount, they would no longer be in a loss for the Q3 2021. But why would they do that? When you're a growth company like SoFi, the main aim should be to gain more users and more subscribers onto their platform so then they can sell them their products. So I don't see any problem right now with them spending this amount on sales and marketing and technology and product development, when you can also see the number of users in the company increasing rapidly and also the number of products they have. Before I go any further, I just want to say that none of this is financial advice and you should always do your own research before investing in a financial asset. But if you were to look at the market cap of SoFi, you will see that it's only around $10 billion, which is quite low for a company growing at the rate of SoFi is right now. If you look at the institutional ownership of SoFi, you'll see that it's around 44%, which is pretty high. And you'll also see companies like Vanguard, Charles Schwab, and State Street invested into the stock. And you always want to have these big companies invested into a stock you like. Now let's take a look at the technical analysis of SoFi. I'm going to be doing a recent technical analysis for SoFi as I'm not too familiar with all of the patterns and I'm not that experienced yet, but I will get there soon. If you look at the chart of SoFi since December 21st, you'll see that on these dates, which was 19th Jan, 20th Jan, and 21st Jan, there were massive spikes in volume. Basically, these red bars right here, they represent volume. So you can see massive spikes in volume, which led the price to go from $12.18 to around $16.4. And this was because they got their bank charter conditionally approved, which means that basically, this gives SoFi the permission to operate as a regular bank. Another thing that I noticed on this chart is that there's resistance at 16.08 or 16.1, let's say. Resistance basically means when a stock has hit this price and come down from it multiple times. So as you can see, it hit 16.1 over here and 16.1 over here as well. And from this 16.1, it went down all the way to $12.2 or $12, and then all the way back up to 16.1, and now it went all the way back down to $12 again. With the current market conditions, I can honestly see SoFi going under this support and making new lows. But if you really believe in the company and you like the company, you should use this opportunity to buy in cheap. But for right now, it's still trading in this channel. Now, if you look at the relative strength index, which is another indicator as to whether a stock is going to go up or go down, you can see that it's around 44.83, which is pretty normal, I'd say. Anything under 30 is considered oversold. So if you see an RSI of under 30, that means the stock is undersold and it'll likely see a bounce back from that point. But if you see that an RSI is above 70, that basically means that the stock is overbought and is probably going to drop down from that point. So as you can see here, at this peak of this RSI, which was at 70.88, SoFi was at its peak. And then as the RSI came down, so did the price of the stock. The market kind of sucks right now, so I would definitely wait and watch to see what SoFi does in the near term. SoFi also has another catalyst coming up with the Super Bowl being played in the SoFi Stadium. That means a lot of eyes are going to be on it, and this could lead to more user growth and thus more products for the company to feed these users. Kind of ran out of breath there. But this will only take place in SoFi Stadium if the California state says they're allowed to because of COVID. So as I said, short term, I think that the stock might be going lower, but in the long term, I think it might be a good growth stock, especially given the fact that a lot of Gen Z investors like us like everything convenient and in one place, which is what SoFi offers for your personal finances. So let me know what you think of SoFi in the comments below, and also please let me know if you have any feedback on any of my videos. I really appreciate it. And also please like, subscribe, and comment and do all that good stuff, and I'll see you guys in the next video.